Thank you, Nikel. I would like to welcome everyone as well to today's webcast. My name is Levi Robinson. I work for Aviva USA here at the home office in Des Moines, Iowa. I work in our training and education area. Today's topic, we're going to be covering really the whole gamut of who Aviva is, some of the products that we offer, some of our unique competitive advantages, and then follow it up or finish it up with a few sales ideas. So first, just who is Aviva, some of our strengths, and some of our sweet spots. We have a very solid financial strength. We are the longest and oldest continuously operating insurance company in the world, over 300 years we can date our lineage back to. We have an industry-leading index life portfolio, including 3 highly competitive no-lapse guarantee solutions. We offer an innovative and exclusive Wellness for Life rider, which we'll discuss today, that can offer your clients a cost of insurance reduction within their policies. We have competitive and unique underwriting, particularly on very large cases. We have a highly trained advanced market staff for your complex cases, as well as some turnkey programs that have been developed. We have an external term conversion program and lifetime rolling target premiums that we'll touch all upon today. Let's touch on and talk about our industry-leading life insurance portfolio. And here is really the broad spectrum or gamut of products that we offer. In the upper left quadrant, we have our indexed universal life policies. We have 2 single index policies, being our Lifetime Builder, which is our main cash accumulation vehicle, and we have our Advantage Builder product, which is really designed to be that guaranteed low-cost death benefit sale. We have a second to die policy, being our Index Survivor Universal Life, and a multi-choice indexed single premium life policy, really designed to be used in those wealth transfer scenarios. To the right of that, we do have a term portfolio. We have an annual renewable term product designed for those situations where you needed to get that insurance put in place, which then we can then convert to a permanent plan at a later time. And we have a 10-year, 20-year, and 30-year term product as well. Bottom left is our traditional UL policies. We have our Patriot Solution Series 2, or Capital Solution as it's called in New York. We have a Guarantee UL solution that has a built-in no-lapse guarantee, as well as a fixed multi-choice single premium life product, once again designed for those wealth transfer scenarios. Some popular riders that we'll touch on today, we have our Wellness for Life rider, no-lapse guarantee, Life Protector, Early Cash Value, and Accelerated Benefits rider. So what is indexed universal life? Well, this slide here just really gives you the easiest way to understand indexed life insurance. Sometimes it's not what you gain, but it's what you don't lose. As you no doubt realize, these are difficult times for the financial markets. But while investments in the stock market have lost a great deal of value, the money placed in an Aviva index policy has been protected from market losses due to our minimum policy guarantees. So you can see here, as the market changes every day and goes down, even if it goes down, your Aviva policy, since the indexing feature allows you to participate in the upside potential but not participate in the downside, even in the past year and a half, our clients have lost no dollars in their indexed universal life policy, since we are able to lock in our clients' gains. So let's make it simple. An indexed universal life policy is like all the traditional universal life plans you have ever sold. It has your cost of insurance. It has your monthly expenses. It has opportunity for portfolio growth. The only thing that's different is the interest rate crediting. Instead of a bond crediting rate, interest crediting is based on the movement of a stock market index. Here down the line, comparing a traditional UL policy to an indexed universal life policy, you're going to see they're very similar. Both offer flexible premiums. Both pay an interest rate as determined by the company. Both can include rolling target premiums. Both can incorporate a no-lapse guarantee feature. Both allow for withdrawals and loans, and so on and so forth. The only thing that is different is the upside earnings potential with index-linked interest crediting that is available on an indexed universal life policy. Recently, we have seen a shift in our clients as far as a movement of their risk viability. You'll see to the far left here we have our low-risk products. We have our whole life products, and our fixed UL products. To the far right, to the high end of the spectrum, is our highest risk product, being a variable UL or a variable UL with guaranteed minimum death benefit. We've seen a shift kind of for a product that really offers both sides of that spectrum. A product with low risk, but also a product that can offer some upside earnings potential. And that's what indexed universal life can really offer your clients. Choosing an indexed when working with an indexed life insurance policy. Number one, we want to choose one that's well known to consumers. Also one that's easy to track in the media and broad stock market performance. Average stock price changes in widely held companies and industry groups. Standard & Poor's represents 70% of the U.S. market's capitalization. It has historically outperformed fixed interest products by 200 to 300 basis points. Corporate bonds, government bonds, and CDs. The great thing about the S&P is it's public and it is published every day. Let's talk about how an indexed universal life policy's dollars flow when a client pays their premium. Number one, when a client pays their premium into an indexed universal life policy, all that money is initially going to go into what is called a basic interest strategy. The money stays in this basic interest strategy bucket until there is enough money in there to cover the cost of the policy. Once there's enough money in there to cover the cost of the policy, any additional money above and beyond that move out of the index strategy or out of the basic interest strategy and then move into whatever index strategy the client has chosen. The money remains in that index strategy until they mature. The money moves then out of the index strategy, back up to the basic interest strategy, and starts the process all over again. Some features of our indexed universal life products. All of our products offer a 100% guaranteed participation rate for the life of the policy. We offer 8 interest crediting strategies. We offer lifetime rolling target premiums. Do take note, those are not available in the state of New York. All of our products now illustrate based off the CSO tables of 2001, and we now illustrate out to the age of 121. We have 2 loan options available to our clients for getting money out of the policy, and our products offer a guaranteed minimum interest rate of 2%. Here's a look at the 8 interest crediting strategies available to our clients. This is looking at our Lifetime Builder and Advantage Builder products. We have 2 fixed options. We have a 1-year fixed term and a 5-year fixed term if they're not wanting to utilize the index strategies. Currently paying 4.75 and 4% respectively, you'll see to the right. Then we have 5 index strategies. We have a 1-year point-to-point, currently with a cap of 11.5%, illustrating at 7.3. We have a 2-year point-to-point with a current cap of 29%, illustrating at 8.05. A 1-year monthly cap with a cap of 3.5 with a rate of 7. 1-year monthly average with a cap of 11 and an illustrated rate of 5.6. And a 1-year multi-index strategy, currently with a cap of 11% and an illustrated rate of 6.2. Just be aware of where we're coming up with those illustrated rates as we are doing a look back on the S&P over a 25-year time frame and calculating how those indices or how those strategies performed on average is how we are calculating our current illustrated rates. I'm just going to touch on one of the strategies today. We do have 5 of them. But just going to give you an idea of how the 1-year point-to-point works. It is the most commonly used strategy. It does have a 5-year maturity and currently an 11.5% cap. It does have some minimum caps there as well built in, so if the caps change, we could not lower them any lower than 4% is what that is stating. But how the 1-year point-to-point works is pretty simple. Once the client's money goes into the strategy, we're going to write down the value of the S&P 500 on that day. In this example, 1,162.10. Then we're going to wait for 12 months and write down the value again. In this example, 1,313.17. All we're going to do is calculate on a percentage basis how much that went up. In this example, it went up 13%. If we have a cap of 11%, our client would then receive 11% credited to their policy. Our products offer special features as far as loan access and our Life Protector rider. You can utilize an indexed universal life policy for retirement income purposes. And you can do that three ways. A client can take withdrawals from the policy, they can take a fixed rate policy loan from the policy, or they can take a variable rate loan. Variable rate loan is probably the most commonly used. With your variable rate loan, account values and loan values continue to earn interest as if no loan had been taken from the policy. In this scenario, possible arbitrage is possible when index earnings exceed your variable loan rate. This variable loan rate is based off the Moody's Corporate Bond Yield Average. Currently for November, it is set at 5.55%, and you'll see December and then January there in the upcoming months. Our products offer a rider called the Life Protector Rider. This is utilized on the policy in overloan situations. If the client were to be in jeopardy of taking too many loans and the policy were to lapse, the Life Protector Rider will kick in and then create a paid-up policy. This is an optional benefit on our policies. It is not required. It really provides the beneficiary, the insured, and the agent really additional peace of mind. It's going to prevent that policy from lapsing as a result of loan indebtedness. You may add this rider after the policy is issued without any underwriting. If the rider were to be exercised, there is a one-time fee, but the fee is pretty minimal compared to the tax consequences the client could have if they had taken out quite a few variable loans tax-free, and then the policy would be to lapse. They would owe all those back taxes in 1 year. They'd get a pretty nasty 1099 if that were to happen. No lapse guarantee sales. Aviva's no lapse guarantee products are very competitive, and we have three great products to offer. We have our Advantage Builder or Empire solution in the state of New York, which is our indexed universal life policy with a no lapse guarantee rider. We have an Index Survivor Second to Die policy with a no lapse guarantee rider. And we have a Guarantee UL solution, which is a traditional UL policy with a built-in no lapse guarantee. You'll see all these products offer our clients a very competitive no lapse guarantee premium. We have flexibility to meet the consumer's need with the option to reduce the guarantee premium by paying to age 121. We also have the opportunity to reduce the no lapse guarantee premiums with the utilization of our Wellness for Life rider. Here's a quick snapshot of our competitiveness when utilizing our Advantage Builder Series 2 in a no lapse guarantee scenario. Here we have a male with $1 million death benefit. To the far left we have our client's rating. Down to the right of that is the client's age. Across the top you will see three payment scenarios, being a level pay scenario, a 10-pay scenario, and a single pay scenario. Aviva is ranking in the top 5 in premium rankings in yellow, top 10 in green, anywhere above that in white. So you will see across the board, Aviva has a very competitive no lapse guarantee product. I'm going to switch the screen here. This is the female ranking, same idea. Three different payment scenarios across the top, level, 10-pay, and single, and then Aviva ranking in the top 5 in yellow, top 10 in green, anywhere above that in white. So a very competitive no lapse guarantee product. We're going to switch gears and kind of touch on a very unique life insurance rider that is unique to Aviva. It is called the Wellness for Life rider. The Wellness for Life rider was introduced about 3 years ago at Aviva. When a client signs up for the Wellness for Life rider, they're going to receive two things. They're going to receive wellness benefits, and they're going to receive wellness rewards. The first thing we'll talk about are these wellness benefits. These wellness benefits are provided to the insured from the Mayo Clinic, one of America's premier health providers. These benefits will include access to the Embody Health website, where the client can go and do an online health risk assessment from the Mayo Clinic. They will have access to a 24-hour nurse hotline. The great thing and differentiating thing about this nurse hotline is that it is staffed by nurses from the Mayo Clinic, which on average have 24 years of nursing experience. They will receive a quarterly newsletter, as well as discounts on publications. The second side of the coin is what we're going to talk about today and really focus on are the wellness rewards.